Hey traders, welcome back to the channel. Today, we are diving into a topic that has been gaining massive traction, Python trading. Ever wonder how those automated trading bots you hear about actually work? Or why Python is becoming the go-to language for the traders around the world? Well, you are in the right place. In this video, we are going to break down what Python trading really is and how it works behind the scenes and why it could be a game changer for your trading journey. First up, what is Python trading? So what exactly is Python trading? In a simpler term, it is using Python, which is a powerful, versatile, and relatively easy to learn programming language to automate your trading strategies. But it is more than just letting the bot to do the work for you. It is about using some data-driven decisions to trade smarter and faster. Picture this. You wake up in the morning, you open your trading apps, and you see that the bot you have programmed has already made the trades based on the strategies that you have set up. Instead of staring at the chart all day long, you create a set of rules for your trades, and your Pythons handle the rest. It analyzes data, execute trades, and even manage your risk, all while you focus on other things in life. Manual trading can be stressful, especially when the markets are volatile. But with Python trading, you eliminate emotions from the equations. Your bot follows your rules strictly, no fear, no greed, just pure logic. Now, let's dig a bit deeper to see how this actually works. Section number 2, how Python trading really works. Alright, let us break down the process of Python trading step by step. First up, it is all start with data. Data is the backbone of any successful trading strategies. In Python, you can easily import vast amount of market data using libraries like Pandas or NumPy. You can even pull in live data from sources like Yahoo Finance, AlphaVantage, or directly from crypto exchange like Binance or Bybit. Once you have the data, the next step is to analyze. This is where your Python shines. Whether you want to calculate some moving averages, you want to spot some trends, or you want to identify some trade signals, Python has you covered. You can write a custom algorithm tailored to your trading style, or you can use some previewed one from the libraries like Algorithmic, which is packed with technical analysis tools. Imagine you have coded a simple moving averages strategies. The bot will buy when the price crosses above the moving averages and sell when it crosses below. Sounds very straightforward, right? But the power lies in the flexibility. Python allows you to tweak every parameter until you find what is work best for your trading strategies. Now, before you go live with your strategies, you need to backtest it. Backtesting is just like running your strategy through a time machine, and you can apply your trading rules to the historical data to see how they would have performed. This step is so crucial because it lets you to spot your weakness in your strategy before you risk any real monies. Backtesting also gives you a deeper understanding of your trading strategy performance metrics like the Sharpe ratio, your win rates, and your drawdowns. These metrics can let you to decide whether your trading strategies is robust enough to handle the live trading. So once you're confident with your backtest result, it is time to automate. With Python, you can connect directly to your broker's API like those from Interactive Broker or Binance or Bybit, and have your bots execute your trades based on your trading strategies. The bots will monitor the markets in real time, follows your rules, and make trades 24/7 non-stop. No more missed opportunity, no more sitting at your computer all day. Your bot does it all. And here is the best part, it is adaptable. You can update your strategy, change your risk parameter, or even switch to a completely new approach without skipping a beat. Section 3. Why Python? So, why are we choosing Python? Why not other programming language like Java, C++? So Python popularity in trading comes down to 3 simple things: simplicity, versatility, and community. Let us start with simplicity. Python's syntax is clean and easy to read, even if you are new to coding. This makes it accessible for traders who don't have any background in programming. You don't need to be a software engineer to start automating your trading strategies. Take a look at this comparison. Here is a simple task in Python, and here is the same task in Java. Notice how much cleaner and more concise the Python code is. This simplicity means you can focus more on developing your trading strategy and less on wrestling with the codes. Next, let us talk about versatility. Python isn't just for trading. It is used for a wide range of fields, from data science to web developing to machine learning. This versatility means you can use Python for everything from analyzing your trading data to building a fully fledged trading platform. With Python, you can seamlessly integrate all those steps of the trading process: data collections, analysis, strategy development, backtesting, and execution into one unified workflow. This makes your trading operation more efficient and less prone to errors. Finally, there is the community. Python has one of the largest and most active communities of any programming language. This means you have access to endless support and endless supply of resources, tutorials, forums, pre-built library, and even some open source trading boards. If you ever run into a problem, chances are someone else have already solved it, and you can find the answer with a quick Google search. The Python ecosystem for trading is incredibly rich. Whether you are looking for backtest a strategy with Zipline, or visualizing your data with Matplotlib, or calculate some complex financial metrics with QuantLib, Python has a library for it. So, for those of you who are new, Python is a fantastic place to start. And for those with experience, you already know how powerful Python can be, especially in trading. It is used by some of the biggest players in the industry, from hedge funds to algorithm traders. Python skills are highly sought after in the trading industry. Many hedge funds or many prop firms look for candidates who can code in Python because they know it is the key tools for building and maintaining a trading algorithm. Section number 4. Real-world applications and examples. Now, let us talk about some real-world applications. Python isn't just about a toy for hobbies. It is used by some of the biggest names in the industry. For example, quant farms and hedge funds rely on Python for data analysis, backtesting, and executing their trading strategies. Let's say you want to implement a moving average crossover strategies. You can write a Python script that calculates a short-term and a long-term moving averages, and then execute a buy trades when the short-term cross above the long-term, and a sell trades when it cross below. And then you can backtest this strategy using historical data to see how it will perform in the past. Here's an example of what that might look like. You can see the buy and sell signal generated by the strategy alongside with the overall performance. Notice that how Python can make it easy to visualize your strategy results and tweak the parameters until you find something that is work. But it doesn't stop there. You can take this a step further by connecting your Python script to a broker APIs and having it execute trades in the real time. Imagine having a bot that trades Bitcoin for you 24/7 based on a strategy that you have fine-tuned to a perfection. And if you are more advanced, you can integrate some machine learning models into your trading strategies. For instance, you can train a model to predict stock price based on historical data. And then you can use these predictions to inform your trades. Python extensive libraries for machine learning like TensorFlow and scikit-learn make this possible. Machine learning can take your trading to the next level, allowing you to develop strategies that can adapt to a changing market condition. It is like giving your bot a brain that can learn from the past data and get smarter over time. To wrap things up, Python trading is a powerful tool that you can transform the way you trade. Whether you are a beginner looking to automate some simple strategies, or you are an experienced trader developing some complex algorithm, Python gives you the flexibility of power and community support you need to succeed. I hope this video has given you a solid understanding of what Python trading is and how it works. So if you found this video helpful, please give it a thumbs up and share it to your fellow traders. And if you are ready to dive even deeper, make sure to subscribe and hit that notification bell so you don't miss our upcoming videos on backtesting some strategies or maybe some building some trading bots and more. Until then, see you in our next video. Bye!